everyone. Today we're going to talk about taxes since it's, January and it's the best time to talk about this topic, right? So here with me is Carmela. She is actually my accountant, and I asked her if she can help me answer questions, especially for different sellers like newbies, the one who started corporations, and the one who's like selling in the US. Maybe she can help us to answer all the questions we have. Good afternoon, Carmela.
Hi there. Hi, Cheryl.
Hi. Would you mind introducing yourself, please?
Sure. So my name's Carmela Pirillo. I'm a CPA in Ontario, and I've been doing this since 2002 with Amazon sellers. I've kind of started with them back in January of 2019. Before that, I used to be an Amazon seller myself, so I really do know the pains that everybody goes through to just try and make that sale. So I was a seller from 2016 to 2018. Then I just decided, you know what, let me stick to what I really know. and of course we didn't have coaches, right? Like I didn't know that I could reach out. So anyway, I've been helping sellers since 2019, I guess. Yeah.
That's an experience for you, I guess, when you start doing the selling and then figuring it out on your own, right?
Yeah, it was frustrating. I will say it was very frustrating.
Yeah, so that's the reason why I ask your help, because a lot of, I coach myself, and a lot of the students, even if they've been doing this for a while, I realize that a lot of them don't know anything on how to do it in terms of taxes, especially as Canadians. So there's a lot of information out there, but it's more focused on US sellers. So I'd like to make a content for also for us Canadians, because we have a different tax regulations, and especially with the GST, HST, and stuff like those are very confusing for a lot of people. And since we're self-employed, we work from home, so people are confused. Oh, we can deduct that? Oh, like they ask me questions, right? So I'm going to break down this interview in 3 parts. So first question, the questions were going to be for people who's just starting with Amazon, right? So the questions will be for new sellers, and then I will also talk about people who's sellers who's selling for a while, so they decided to open a corporation, so they also have some questions, and especially U.S. taxes. I know that in terms of U.S., like there's people who really specialize on that, like accountant, but I hope you can still answer some of our questions. That's like in general in terms of U.S. taxes, right? So for the newbies, so a lot of their questions starts with, do we need to open a business license right away? So I opened my business yesterday, and I just want to try, like I'm going to open personal account only. Like, do I need the business license right away or not? Like, can I sell like by just trying it?
Right. So business license, what we think that is like it's called a master business license. So basically you're registering your business name. It's not a corporation. It's just a business name that is attached to you, right? So you don't have to have a business name. Okay. You can operate under Cheryl Marcinick. You don't have to register. But if you're selling on Amazon, I don't think you want your name showing up everywhere, right? You want your storefront. You want something that sounds like a business, right? Even if you're just going to try it out, because the business license costs about $60. It's not a big investment. So that's what I would do. Whatever your storefront name is, right? Usually that's your business name. So I would register that with the product that you live in.
Okay. And can you do it online? Like, can I register online?
Yeah, for Ontario, for sure. I know absolutely you could do that. I'm assuming the other provinces are also online by now.
I guess they just need to go to Google, type like application for
Or register a business name, and then you can put in your province, and it should pop up. You just have to be careful because there's a lot of companies or these service providers that will pop up instead of the government website.
Yeah, I remember that when I was starting, and I realized that that's not the one, and you need to pay extra for it, right?
Yes.
Yeah,
yes.
That's a good point.
Always make sure that it's your province's link. And if you're unsure, call the province.
Mm-hmm. Okay, so how about the business account? So what's your advice on opening business account for new sellers? Is it really a must to have a business account instead of their personal banking account?
So yes, I think you must have a separate account. You don't have to necessarily open up a business account, but it needs to be an account that is separate from your personal, right? So that we don't see you buying your groceries through there, right? And it's not for your accountant, really. It's if you're audited, the government comes in and they get to see your personal stuff too, right?
True.
They're your business, not your personal stuff, right?
Yeah.
So you want to keep it separate. It also keeps your bookkeeping very clean.
Yeah.
And that means you save bookkeeping time, right?
Yes, I think I as a seller, I learned it the hard way. So, when you're new, you don't know, you just you're trying, right? So then I realized, I need to separate. So at least at the end of the year, it's so easy for me to figure out what did I pay for the business and what not, right? So how about GST and PST, or do they need to get it right away too?
Okay, so those are separate sales tax. So let's deal with just the GST, HST.
Okay.
So depending where you live, you either have GST or you have HST.
Mm-hmm.
They're exactly the same tax. They're just different rates that you have to charge, and you pay it to CRA, the Canada Revenue Agency, right? So that's one. The PST is for your province. So there's only 4 provinces that have the PST. So if you're in one of those provinces, then you get to remit 2 types of filings. But with the HST, GST, I know last July, Amazon, as of July 15, I think they're required to charge and remit the tax on behalf of the sellers who do not have their HST number, right? So if you're brand new now and you're wondering whether to register for the HST, you don't necessarily have to, because Amazon is supposed to be doing that for you.
Okay.
Now, keep in mind, if you're buying product locally, you won't be getting back the HST that you paid out if you don't have an HST number.
Yes.
Right. So it's a little, it's like, well, if I'm, new, do I do it? If you're already registered, then you're fine. You have to keep, remitting.
Yeah.
But it is a little, that's why I think there isn't one blanket type of answer. But I think, generally speaking, you don't have to register until you hit $30,000 of your worldwide sales. Yeah.
So that's the general rule, right? So, but what if, we say, because I've heard it from another accountant, it's better for you to register earlier so you can get back everything that you're paying for taxes, right? So, for example, you're sourcing, you're paying GST. If you're registered, you can get it back. So, does the government allow you to do that? Even if you didn't? Okay. So, what do they need to do? Just tell them that I want the GST.
That's right. You can actually register online. So what you do is, now you volunteer, even though your sales are not 30,000, you want to register for HST or GST so that you get the tax back on your sourcing, the products. Right?
Yes.
That will mean that you must charge the HST.
Yes.
You don't have a choice, right? So as soon as you register, even if your sales are 0, right? As soon as you get your first sale, you need to charge HST.
Okay, I have a follow-up question. So, you know how with GST, like you can do like quarterly or annually. What's your advice on that?
Okay, so some people will say, "Oh, I can't be bothered every 3 months to do this HST filing because that takes work, right? It's a lot of paperwork." However, if you wait till the end of the year, one, if you owe the government money, it's a big amount, right?
Yes.
And if the government owes you money, they've been holding on to your money for the whole year, right?
Yeah.
I'm sure you can put that refund to use, right, for
Yeah.
more product. So I personally, monthly or quarterly at the very minimum, but if you want, you can do monthly. But if you choose, these frequent filings, you really have to be on top of your paperwork because if you start missing filing dates, the government's going to come knocking.
Yeah, yeah. I have an experience with that, right? Like, unfortunately, like I'm not on top of things a lot of times, so I decided to do annually, so it's easier for me. Yeah. So there's a lot of sellers too. So recently, I have a student who she ended up having the GST, I think, last January, and but forgot to put it into the Amazon Seller Central. What will happen?
So now, regardless of whether HST was collected on the sales, she owes the government that money. So basically, it comes out of your pocket. Because normally, if you charge, 13%, you get that money and then you give it to the government. So it's not affecting your pocket at all, right? But if you forget to collect that 13%, you're paying the government 13% out of your pocket.
That's why it's very important to input that number as soon as you get it, so you won't forget, right? Yeah. I feel so bad for people, or like for sellers who end up having this, because I know that if they're not like, big sellers, it might not be a lot, but if you're a big seller, that's hard. Right?
I have a client who fell into that. I think her sales were 300,000.
Wow, that's a lot. Yeah. Okay, so let's go to registering for corporation, sole proprietorship, and partnership, right? So when do you recommend applying for sole proprietorship or partnership or corporation?
Okay, so a sole proprietor is basically you. There's nobody else, no partners, nobody. It's just you. And again, the way you register would be that master business license, right? You register your business. And basically your income and expenses are reported on your personal tax return.
Yes.
So that's the one. Partnership is it's a proprietorship. So it's not a corporation, but it can be you and other people. And on the master business license, you'll have everybody's name on there. What that means is you will decide how you're going to split the profit. So if there's two of you, it could be 50-50, it could be 60-40, but however you split it, that portion will show up on your personal tax return, right? And then we have the corporation, which is completely separate from the individual. When you incorporate, basically you have to file a corporate tax return and a personal tax return. So they're very, very separate. Now, whether to incorporate is, it kind of depends on a few things. Mainly, it will depend on whether or not you're going to need most of that money to live off of. So if you have no other job and no other source of income, it's not a good idea to incorporate, because the main reason why you would want to incorporate is because we have wonderful low corporate tax rates, right? So you want to get the tax benefit, but if you're taking out all the profit, then it's going to get taxed in your hands, not the corporation. So it'll be at whatever your personal tax rate is, right? So that's the first question I ask people, is whether or not they have other sources of income and will they need the money to live off of?
That's a very good advice. Okay, so so what are the pros and cons of paying yourself from the business through either salary or corporation? Because once you open a corporation, either you decide to do salary or dividend, right? Like, which one do you think is better? What's your opinion or like your advice on these choices?
Yeah, so I mean, so salary and dividend have their pros and cons. The salary, basically, the pro is that you pay yourself every month or every 2 weeks or however frequently. And every month, by the 15th of the month, you pay the taxes on that salary to the government, which means that when it comes, to April 30th, and you file your taxes, you're not going to owe any tax, right? So people are like, it's been taken care of. Dividends are different. Dividends are basically like a transfer. You transfer money from your bank account to your personal bank account. But whatever you transfer, no taxes are being paid throughout the year. So that means you need to be prepared for a tax balance at April 30th. Right? So that's the con of the dividend. The dividend is easy to do, right? You just take money. You don't have to, there's no administrative paperwork, right? You transfer the money. And at the end of the year, you tally it up. Your accountant prepares a T5 slip for you, and you report it on your tax return.
Okay, so what if that dividend, so for example, you took like 10,000 dividend this year, but then next year you end up making more money and you save a lot of your salary and say, okay, I'll just pay that as a loan. Is that possible? Like, can you pay it back to the corporation?
Well, you could pay it back to the corporation. So if you took, let's say, $10,000, you have to make that decision though, right? So at the end of the year, if you say, okay, I've taken $20,000 from the corporation, but I am for sure going to be paying it back by next year end, then that's fine. Right? But if you say, well, I'll probably pay that back, then, if you don't pay it back, it has to come into income.
Yes. Okay. That's good to know. Okay. One of my students actually wants to know, so what are some capital expenses that can be deducted from the business other than computer or laptop? So can you provide examples of equipment or home offices expenses that are allowed? Because I think the student wants to, he's trying to save as much as he can in paying taxes. So as a self-employed, we have, things we can buy that's allowable for business, right?
Right. So you have to kind of see what type of business you're in, and you're in the e-commerce business. So ideally, like, what types of equipment are you going to need? Like, will you need, a heavy duty printer for your labels?
Yes.
Shipping equipment, things, the wrapping machines.
Yes.
It depends what how intense your business is. If you've got a prep center, then you're just packing boxes and shipping it there, or it's going straight from wholesaler, right? So there isn't a lot of equipment or capital expenses, right?
Yeah. For example, so I would give you a situation. So for example, so when I was living in our old house, so we used the whole basement as our office, right? So it has a one room, one bedroom, and the whole basement, including the washroom. That's what we're using, right? So we need to buy tables. We need to buy chairs and stuff like that to make it like there's an office there, and there's like the prepping area. So all of those tables, chairs, and stuff can be deductible, right?
That's right. Yes.
TV, because when you're packing, you want to watch.
I don't think so.
It's not allowed, right?
No, that would be tough to sell to the CRA.
Yeah, but computers, like monitors and stuff like that, are okay, right?
Yes, that's right. And you have to remember, they're not expenses, right? Those are capital assets. So you actually amortize them over a certain amount of time. So you get a little bit of expense every year.
I see.
Right?
Like, I didn't know that.
If you paid a laptop $2,000, you don't get the $2,000 deduction in the year that you bought it. It would have to be amortized.
Okay.
And every type of capital asset has a different rate.
I see. So if that's the case, do I need to tell the accountant each year, or they already know that for example, last year I bought a computer. I submit the receipt to my accountant. So next year, do I need to resubmit that?
No, because your accountant would have recorded it as a capital asset, and it basically will carry forward in your tax return.
So I guess that's important also to keep one accountant all the time so they know everything that's happening.
Yes and no, because as long as, you're able to access your tax returns online, you can change, right? It's just good to have the same one for a number of years because you get to know each other, right? Sometimes the accountant will ask you questions that you didn't even think about. And that's because they know you, right? They've gotten to know how you work. So that's important. That's why you want to create some kind of relationship.
Okay, so in terms of so since we're self-employed, so as I've mentioned last year when I was living in the old house, so we used the whole basement on that. So what's your in a tax point of view, how do we declare the house expenses and the mortgage or the rental for the house? How will it relate to our taxes because we're using it for business?
Yeah, so the simple way is just by taking the total square footage of your home or your apartment, right? And divide that by the total square footage of the space that you're using. And this space. So it'll get complicated if, let's say, you're using part of your kitchen, right? Because you're using that personally, but you're using it for business too. So there's a special formula on the CRA website that you need to use. But let's just assume, like you said, your basement, right? It's strictly for your business. And then I would take this total square footage of that compared to your total house.
Okay, so that's answered. So that's good. So how about Rrsp and insurance, right? Yeah. So if I have a corporation, and can the corporation pay for my Rrsp and my family insurance? Because when you're an employee, you get that from a company, right? So is it going to be the same in my own corporation?
So your company, your corporation can physically pay for these things for you, but because they are a benefit for you, it's taxable. So if, let's say, your insurance is, $500, not even $500, that's too much, $100 a month, right? So that's $1,200 for the year. That means at the end of the year, your accountant needs to add that to your either salary or to your dividends, right? And it's going to be taxed in your hands on your personal tax return. And it's not a deduction for the company.
So it doesn't make a difference, basically.
Yeah, it's not like, oh, this is wonderful, the corporation can now pay for this. No, you're just using the corporate money, right? It's coming out of there, but it's for your personal use, which means you're going to get taxed on it.
Okay, so how about car? As you know, for example, with us, especially this pandemic, we don't even go out. Our car is really fully for the corporation, right? For our business. So my husband is the one who goes out every single day to get all the supplies and everything, buying and stuff. So what's the rule on buying a car or using your car? Let's start with using your personal car for the business.
Okay. So that's obviously allowed, but you need to keep a mileage log. So you need to track from January 1st to December 31st, you need to track what your kilometers were for business, right? And then at the end of the year, that helps you take a percentage of all your vehicle expenses, right? So let's say you drove 40% of the time, right, for business. Then the 40% gets applied to your fuel, your repairs and maintenance, your insurance, if you're taking 407, that sort of thing. So we need this percentage to figure out how much of your vehicle we can deduct.
Yeah, and I think with QuickBooks, we are using QuickBooks, so QuickBooks can track it, everything, right? So that's the good thing of
my little app in there. Yeah.
Yes, that's what my husband is using in order, for us to track how many mileage we're using for the car. But how about leasing? So what's your advice on leasing? Some students I've heard one guy say, I got my Tesla because of Amazon. Is that possible?
Well, do they mean that they got the Tesla because their business is paying for it?
Yes. Is that possible?
It's possible, but only a percentage, right? You can't say that 100% of that Tesla is for business. And if you are saying that, you better make sure you can prove it with your mileage logs, right?
Yeah.
Because then you must have another car for personal use, right? Because there's got to be a personal portion to our vehicles, right?
Yeah, and I think the best way is to get a van, because van makes more sense, right?
Well, yeah, for hauling all that product, sure.
Yeah.
Sure.
So how about if you're going to buy, for example, with us, we source a lot. And one time I saw this van pulling another trailer, right? And I said to my husband, that's a good idea. Because sometimes instead of you going home to bring the stuff, why don't we buy something like that? So with that, it's an attachment. Would that be 100% expenses for the business? Because really it's solely for the business.
Yeah, so if you're a sole proprietorship, then you're going to buy it, right, in your name. And it's going to be a capital asset. So it's going to depreciate, right? You can amortize it over a certain amount of time. So that's good. You can have that as, fully for your business. If you're in a corporation, it would have to be that the corporation buys it, right? So it's not something that needs a name on it, right? It's not like a vehicle where it's going to be on. So you would have the corporation buy it. It, again, would be a capital asset, and you would amortize it over a certain amount of time. So, yeah, if you can justify that it's strictly business 100%, then you can take 100%.
Okay, that's good to know. Okay, so what kind of business loss we can claim as an Amazon seller? This one, a lot of people don't know really. And I told them about, for example, returns and whatever didn't sell, because as you know, sometimes after a year, nothing, or you're going to get charged. So you just pull out the product and you cannot return it anymore. So it's a loss, right? So a lot of people don't know about that. So what are, maybe you can have sort of advice on what other things they can claim as a loss as a seller?
Well, I mean, obviously damaged product, right? So if you're either wholesale or even retail online arbitrage, right? You get your product at home and you open it up and there's a few boxes that are broken or whatever, and you can't sell it. So that's similar. It's not quite returns, but you can't send it to Amazon to sell. So you want to make sure you're catching all these things. Hopefully you don't have something like this, but sometimes with employees, right, you might get some theft, right?
Yeah.
So I've seen, my clients, unfortunately, having to, claim some theft and fraudulent theft as well. Other than that, I mean, it's not so much losses that we're claiming, but we're claiming all the eligible business expenses to ensure that, we're reporting properly. The goal isn't to report a loss on your tax return, or the goal isn't to pay zero tax, because if you're paying zero tax, you truly aren't making any money.
Yes.
Right? We just want to minimize the tax.
Yes. And I just want to let them know that there's a report like in a Seller Central that you can pull out, like everything that you're taking out from Amazon warehouse. There's a record there that you can just download and you will see everything. Especially, that's why with me, I try to do it like as much as I can, even sending it back or disposing it, because we're allowed also to dispose it, right? But you will always have a record there, what you dispose and what you send home, and that's a good way to start in finding like what's the loss of your business, right, in Amazon. Yeah. And also one of the students also asked, she said, like, what are the tips you can give to incorporated Amazon sellers for reducing taxes? So aside from what we talk about, is there anything else? I know this is a big deal because a lot of them are trying to figure out like how to reduce their taxes, right?
Well, it's funny. This may not sound like it would reduce tax, but I would strongly suggest having a bookkeeping system. So whether you want to choose Wave Accounting, Xero, QuickBooks Online, whatever, not spreadsheets. Spreadsheets, you can miss things easy. With a proper bookkeeping system, if you have a bookkeeper that's going to help you, going through your bank accounts, going through the credit card accounts, your receipts, everything. We want to make sure that we're capturing all the expenses, because that's, the one way not to reduce your taxes is to forget expenses.
Yeah.
It's easy to do with Excel spreadsheets. It really is.
Yeah, that's my question later. Like, would you recommend spreadsheet over like software, right? Like, I guess you answered my question, because like sometimes people would think, oh, I'm paying so much for bookkeeper, I'll just do it myself. But you end up maybe paying more simply because like you don't know exactly what you're doing. And these people are experts who can help you to figure out what else, like, you can properly, supply to the government in order for them to calculate the proper taxes, right?
Yeah, absolutely. I mean, I know from the other side, it sounds like there's a lot of time spent on the bookkeeping, but that is where the time is spent. If it's not spent there, then the accountant has to spend it on the tax return, which is going to be even more expensive.
Yeah.
So I have a lot of clients with spreadsheets. I try and train them. If you are going to use spreadsheets, because I don't tell people what to do, right?
Mm-hmm.
I'm not going to say you must have this or I'm not going to work with you.
Yeah.
I will do my very best. But if it takes me more time in the end, then it's going to be more expensive.
Yeah, in terms of auditing too. So, for example, you get audited by CRA. Is it also easier? Would you say that people who's using software are like, it's more less chances of them that being audited because everything is there already?
Well, I mean, auditing is kind of random as well.
Mm-hmm.
But if the government says, okay, this is what they'll ask for, is basically they'll look for GL for ledgers.
Mm-hmm.
The only way you're going to get a ledger is through a bookkeeping system, accounting system, right? Mm-hmm. If you present an Excel spreadsheet to the auditor, they're not going to do anything with that. They're going to want to see all your receipts.
Mm-hmm.
It's appearances, right? If you're working off of spreadsheets, are you taking your business seriously? Are you organized,
mm-hmm.
right? Whereas if you're using an accounting system, it kind of lends a little bit more credibility that, I'm taking my business seriously. I'm organized. Look at this. I have a bookkeeper, or even if you don't have a bookkeeper, you're doing your own bookkeeping, right? And it's mm-hmm. not just, using a spreadsheet.
Yeah, that's true. Okay. So one of the seller I have, like one of the students asking, what should you do if you have more capital in the business? So basically they have some more capital just sitting around because they didn't have much time to source that, for a few months or something, and they have income that's sitting there. So what do you do with the funds instead of just leaving it sitting in the bank account? What's your suggestion on that?
Okay, so I mean, I'm assuming that the business is still going, right?
Mm-hmm.
They just haven't had, I guess, the time to spend that money on product or business expenses. They can actually do investments through the corporation. So just like mutual funds, I'm not sure if you can buy crypto through.
Mm-hmm.
So you can invest. So if you had $100,000 in the bank and you thought excess money, you can put that into an investment property.
So is it possible to buy like rental property through that money from the corporation and just put all the income also to the corporation, right?
That's right. And the property has to be in the corporation's
name. Yeah, not yours. Okay. So that's the big, but that for small amount, the best way is to just invest it into investments like mutual funds or something while it's sitting there.
Whatever your risk level is, right?
Yes. Okay, so what are some mistakes you see incorporated Amazon seller make when it comes to their bookkeeping and taxes? So what are the usual mistakes that most sellers do that you know?
The one mistake that occurs quite often, and that's really because and it's not their fault because they don't quite understand now. Before, as I was selling and the money was in my account, I would just take it and use it. Mm-hmm. So now when they're incorporated, they think that they can keep doing the same. So they're making money and they just take it out and use it. Mm-hmm. And then at the end of the year, I have to tell them, well, you know that $50,000 that you took out, that's now income. Meanwhile, they have a job somewhere else that they're already, making $100,000, and now we're going to add 50,000 to it, right? So I think it's not the biggest mistake; it's the most common and probably the most costly.
Yes, I would say, because you don't know that you're going to be taxed with that, right? Yeah. Okay, so what are the reports or documents we need to give you when it's time to do our taxes? So what are the basic important documents that we need to give you when it's tax time?
So there's tax time, but then there's also bookkeeping time, right?
Yes.
So your bookkeeper, or during the year, the payout statements are important because that helps them reconcile the bank. Your monthly sales summary, because they'll show you what your sales were, what your fees are, right? And if there's HST, that's at the bottom right.
Yes.
And then, of course, your tax invoices that you get every month, because these are has the HST, the GST that you've paid on Amazon fees. So that's important to grab as well. Okay, I have a follow-up question. Is that for both for corporation and sole proprietorship? Yes. Okay. Because, I kind of treat the sole proprietor bookkeeping similar to a corporation, only because if you reconcile your bank and your credit cards properly, then you've got probably 80% of your expenses there, right? So it just helps you ensure that you're picking everything up. You don't have to reconcile your bank account for a sole proprietorship, but I like to, my clients, they take their businesses seriously. Yeah. So they do what needs to be done to ensure that the end result is accurate. Yes, and I think that's important, so you know exactly if you made money or not, right? Yeah, that's important. Yeah. Okay, so what other things? So aside from, we have the reports. So that's the one. And do we need to submit the receipts to you, or like in the bookkeeping side, we need to give it to the bookkeeper, right? Like all the receipts? That's right. Yes, because those receipts all have GST, HST on there that we want to record. Yes. If the bookkeeper doesn't see the receipt, there's no tax because we're not going to assume, right, that there was tax and how much tax there was. we need to see the receipts.
So how about during tax time, right? So that's bookkeeping time. How about the tax time?
So tax time, what I normally do, I review the books
Mm-hmm.
and I ensure that, the sales agree to what the Amazon report says. I deal with inventory as well. So what some people may not know is that if, let's say you started your business January 1st, so you have zero inventory,
Mm-hmm.
then you made purchases all through the year, but you also sold all through the year,
Mm-hmm.
right? At the end of December 31st, there's obviously products sitting at Amazon or sitting in your living room or at a prep center that hasn't been sold.
Mm-hmm.
We need to know what's the total of this? What's the cost? So let's say it's $10,000. That means that $10,000 cannot be your cost of goods sold. It has to be an inventory asset. So you've got this inventory that's an asset ready to be sold the next year.
Mm-hmm.
So when people do their own calculations, like, well, if my sales were 100,000, I purchased 50,000, that means 50,000 is my profit. No, you have to see how much of that 50,000 was truly sold during the year.
Yes.
So that's something that I take into account at tax time.
At tax time. Okay. And okay, so the last question for that was like the one that I have here is actually for QuickBook and Excel. So I think you answered that. So how about in terms of accounting and bookkeeping, like some are confused. So what's the difference between a bookkeeper and an accountant? And like, what are your roles and what's her role? Do we need to hire both? Do we need to just hire you? Can you tell?
It kind of depends. I think most accountants don't do bookkeeping, right? I started out as a bookkeeper when I was, I think, 20 years old. I don't do any more bookkeeping, right? So I have bookkeepers, and what bookkeepers do basically is they look at your bank statements, your credit card statements, all your receipts, and they record it. They do all the manual recording of your transactions, right? They may, if you have HST filings to do, they may handle that as well for you, right? It depends on the level of bookkeeper, right? Sometimes I have clients who will have the bookkeeper do everything, but then it comes to me to do the GST filing, right? And really that's just because I look at it kind of like high level to see if, sales are correct, if there's anything unusual there, right? So the bookkeeper basically does all the, transaction recording. But then your accountant is the one that's going to prepare your tax return. They're going to do the tax planning with you, right? And they need to kind of know what your financial situation is. So that's really the difference. Not that accountants can't do the bookkeeping, but we're probably busy on other things. And you don't want your accountant to do the bookkeeping. It's going to cost you a lot.
Very true, right? So how often do you think we should meet our bookkeeper and our accountant?
So I think with a bookkeeper, I love to see every month, because if you do it every month, so let's say, January's done and everything is reconciled by February 15th. Then you can kind of take a look back and say, okay, what was my January really like? Because I know people use seller board. They might do their own calculations. And when they're sourcing product, they're like, well, the ROI was this, or the profit margin is like 30%. But after you finish and you factor in all the other little expenses for your business, it's not 30% anymore, right? So it's good to know before the year is done whether or not you're on track.
Very true.
You have goals, right? And you want to make sure you're on track. Well, you need the entire picture. So that's why I suggest monthly.
Yeah.
If that's too much for you, then quarterly would be the very minimum.
Yeah, and I would add also that, so when you're sourcing, so for example, with me, I don't source myself anymore. Like I have my husband who's doing it for us. Like And like, for example, if you also hire someone, a shopper, right? So you don't know what store did they went to, and you cannot see, like, you don't have the time every day to check every single receipt to see, like, oh, is it the same price as what we got? Because, for example, one might be selling this for $3.99, and on a different store it's $4.99, and you thought it's all $3.99. And you didn't realize that. And then at the end of the year, you realize, oh, it actually increased in price. And now you thought you made, 30% ROI, but actually you lost money, right? Because of the price difference too, right?
That is awful. Yeah.
Yeah. So I think that's the importance of doing the bookkeeping every month.
Yeah. I mean, every quarter is okay too. Monthly is ideal because your credit card statement, your bank statement comes every month.
Mm-hmm.
It should kind of trigger you to get that part done. With your accountant, I would say at least, middle of the year, right? And then towards the end of the year. If anything, let's say you have to make a big purchase for your business, or, your personal situation has changed and it might affect your business, then just reach out to your accountant, right?
Mm-hmm.
I mean, they're there. It's not a rule that you can only speak to them at tax time, right? It's better for you and for the accountant if you speak to them at least 1 or 2 times during the year.
Yeah, and that's one thing that I love about Carmela, because I can reach out to her anytime. Like, it's like she's just text away most of the time, right? Like, that's the reason why I always recommend you to everybody, because I feel the most comfortable with you. And I think that's the most important, to have relationship with your accountant, because if you're, don't have relationship, then that accountant can't help you, right? Because you're too afraid to ask questions, because they don't, right? Like,
yeah, absolutely.
That's very important for me. That's very important, that I need to feel comfortable and I can ask questions if I don't understand, right? And that's you, like, I'm really like happy that I found you. Yeah. So most of the sellers, they usually hire a VA, which is a virtual assistant, to help them out with the business, because everybody works from home. It's cheaper to hire, VA from another country. So in terms of that, like, in terms of bookkeeping, what's your advice to people who's like sellers who's planning to hire a VA for bookkeeping?
Yeah. So with just first, bookkeeping in general, always make sure that the person who says they're a bookkeeper actually knows what they're doing.
Mm-hmm.
Because I've seen books that are an absolute mess.
Mm-hmm.
So obviously make sure that they have bookkeeping experience. And if they are outside of Canada, make sure that they have Canadian experience, so that they know how our system works.
Because it's possible that they don't know, like, the charges or what's allowed and not allowed, right?
They might not understand the GST, right? Or the PST.
That's true.
That's
yes.
really where, because to record an expense, as long as you know bookkeeping, then you know how to record it.
Mm-hmm.
Although with Amazon, right, you want to know that they have some Amazon experience, because then otherwise they're going to be, posting the payouts as the sales when that's not right.
Yeah, and then you end up paying more because you need to hire someone who knows how to do it at the end of the year, right? The stress that you're going to feel at the end of the year, like your accountant says, like, it's wrong. So now you need to come, like, finding a bookkeeper who knows really how to do it, right? So I guess that's something that we need to make sure that we're interviewing the right people and hiring the right people.
Right.
So, since we're talking about, accounting, and so can you tell me your services that you do? Because maybe some viewers might be interested in hiring you or getting a service from you. What are the services that you do for Amazon sellers?
So we, obviously we have bookkeeping that we provide as well. And now we only provide bookkeeping to tax clients, right? So if you're just interested in bookkeeping, but you don't want us to do your tax return, we don't do that, right? So it's kind of like it comes with the package. We do personal tax returns, small business tax returns. We handle the corporate tax returns as well, tax planning. We handle the sales tax filings for the client. And for some clients, we do payroll, although that's not like really, we don't really promote the payroll end of it because that itself could be a whole business on its own. But I do help with that as well.
Yeah, and you can sort of also help Amazon sellers who like just to figure out on how to do their payroll for themselves, right?
Yeah.
Yeah. Okay. So the last part of our interview we're going to be about the U.S. taxes. So there's not too much questions. So basically, from my experience, so as a seller, so once you want to sell in the U.S. in the Seller Central, they're going to ask you to fill out a form, right? Like to say that you don't need to pay any taxes in the U.S., but you're going to do it in Canada. Am I correct?
Yeah. So, I mean, there's forms on Amazon, but there's also forms that you may have to file with the IRS. I know that sounds scary, but I'm not the expert on the U.S. side of things. So I work with a colleague of mine who's here in Toronto, but he is in Houston as well. So my clients who are Canadian but sell in the States, you know, he has a chat with them and he assesses basically whether or not they need to file the forms, because as I'm told, we're not going to pay income tax to the States, but you could be penalized for not filing a form, an information form, right? So you'd want to chat with somebody like him. Is a tax, I call him my cross-border tax specialist. So,
I think I'm going to get the information later because I think it's important. Maybe I can also post it on this content later on. So if in case they want to ask questions, I think that's important to have someone like recommended by somebody. So basically what you're saying, because I'm not aware of that personally. Like what I know is that we just need to do that I forgot.
W8.
Yeah, W8, right? And is saying that we don't need to pay through US, we're going to pay it through Canada, right? So that's what I know. Like I didn't know that you still need to find a form. So a lot of international sellers in US are also confused about, you know, how different states have different charges, right? So do you have any like idea on how it works in terms of paying the taxes, sales tax on different, I'm not sure if you have an answer with that, but I'm just, you know, it just went across in my mind and I'm thinking like maybe you can give us a little bit of information on that.
Yeah. So from what I understand, almost all the states, they're required to pay the sales tax on the seller's behalf. I think there's a couple of states though that you still have to do that yourself. But it's kind of like the GST here, right? So in a particular state, if you're selling there, you may need to be doing this sales tax filing. Now, you know, how much do you sell out there? I think that is a question that for 100%, you know, his name is Mohammed Akif. He'll be able to answer that question. Yeah.
Okay, so in terms of GST, I'm just wondering about this. So if you are buying your product here in Canada, right? So you're buying it, but then you're crossing it to the border and selling it in the States, but you're not collecting taxes, but you're paying GST here so can you get it back at the end of the year?
You can, if you're registered for your
GST. So I guess so that's a good way to earn more money, right? If you are selling and then you're paying GST with all the goods. So I guess there's the advantage of selling in the States and buying the product here.
Oh, for sure. As long as, you find out whether or not you need to file anything in the States, any kind of paperwork, right?
Yeah. So if I decided, because some sellers, when they're starting to venture on wholesale, right? And when you're opening wholesale account, a lot of the company in the States, they usually ask for a business license, right? Can we ask for a business license? And since we're a Canadian seller, we don't have it. So a lot of sellers would think, oh, maybe I can just open a business, LLC, right?
Oh, yeah.
In the States, right? So maybe I'm going to get a business license in the States so I can get bank account in the States, in that's in whatever province, I can register or whatever. And what's the implication of that? I'm hearing different information, so I want to hear it from you as well. Do you think it's an advantage for us Canadian to open a business license in the States, or it's not a good idea?
Yeah. So a business license, I think, and I hear it from other sellers sometimes, depending on the wholesaler, right? Because remember, we do have business licenses, right? It's the master business license. And I think a lot of the times you need to show that you're registered for GST.
Yes.
Right? But if you're going to the route of opening up an LLC, that will cause you problems here in Canada on your tax return, because although in the States, the LLC is a corporation, in Canada, CRA doesn't look at it as a corporation. It looks at it like a sole proprietorship. Okay. So that gets reported on your personal tax return. So if you've got an LLC, you need to file and pay taxes in the States, but then you have to also report it here in Canada, and you're going to get taxed again.
Okay. So basically, it's like you're being taxed on your corporation, but the income in the LLC in US, we're going to be as a sole proprietor for you. So
right. Yeah. I mean, that's kind of like the very simplistic view.
Yeah.
But again, Mohammed would elaborate on that. And I think for the most part, it's usually no, don't open an LLC. Unless you truly, if you want a proper corporation in the States, then, make sure you work with a U.S. accountant to open up something that, is totally separate from your Canadian, right? You're not going to have to get taxed on it here as well.
Okay, so I guess the best advice is to talk to an expert who's also dealing with Canadian sellers doing business in US, right?
Exactly. Yeah.
Perfect. Okay, so thank you so much. I learned a lot. Even if a lot of things I know already, but still there's certain things you're saying that I learned so much today. And I hope that our viewers will also learn a lot from this discussion. Thank you so much, Carmela.
No problem. Thank you. Yeah, so, I hope it was helpful.
Oh, very much. So if they want to reach out to you, can they just email? Do you have a website that they can go to?
So my website's Carmela at carmelapirillo.com. But you'll have the proper spelling, because I know a lot of people won't be able to spell that.
Yeah, I'm going to put it down in the comment section, so at least everybody will know how to reach you. So can they also go to Facebook and just message you? Is that also okay?
Yeah, I mean, it's fine. I won't do any kind of advising, on Facebook or whatever. But if they want to, send me an email, contact me first if they want on Facebook, because it's probably easy to find me there. But then, I'd prefer that we go through email or a phone call.
Yeah. Okay. Thank you. I won't let you keep you for so long, because I know that you're very busy today. And thank you so much.